Welcome back to the Avenue and thank you for coming in. This is the channel where we just simply make money make sense for the average person. And let me give you a caveat up front. This is for informational purposes only. This is not investment advice, but I am going to help you today and I'm excited about this, helping you for the new investors. This is the year that you've decided, you know what, I'm going to start investing. You may have never invested before, don't know anything about investing, and I'm here to help you. I'm here to help you not make the 7 biggest mistakes most new investors make. That's what we're going to talk about today. So you won't make these mistakes. I want to keep you out of trouble.
She's a go-getter, all right. What a beautiful sight. Anything she sets her mind to, she stays on it day and night. She writes the checks, she signs the deeds. She plants the fruitful seeds and still finds the time to meet all her family needs.
Congratulations if you made the decision. You know what? This is the year. I'm going to jump in and I'm going to start doing some investing. And one of the things that you want to be aware of is that you'll hear things about this hot stock, that hot stock, get in here, get in there, and you're probably a little confused about when to get in. And some new investors, the mistake that they make is trying to time the market. When is the best time I need to jump in? Now, I would never advise anybody or tell anyone or mention to anyone to get in at the highest amount that any stock is selling for. But trying to time the market as far as when am I going to jump in, when am I going to start doing this, that's a bad thing to do also, because you're never going to time. You don't know when it's going to be at the bottom. If you're waiting for it to fall, and then I'm going to hit it then, and then it starts rising again, you just don't know when the bottom is. You don't know when the top is. The best thing to do is to look at the stock market, maybe study it for a week or two and see how it goes up, see how it goes down, because every week, just about, you guys, there's a sale on at the stock market. Every day is not going to be just barreling up, and every day is not going to be just barreling down. There will be opportunities to get in. So I would not delay from trying to time the market. When is it going to be at its lowest? And so just be careful with that, because a lot of new investors, I'm waiting. You know, it's kind of like, when am I going to jump in? When am I going to jump in? And you miss a lot of gains. You miss a lot of, good prices that you could have gotten in because you're waiting. And then what if that particular stock or index fund, whatever you're investing in, takes off to the upside? Then you've missed it. So waiting for the perfect time to get in is probably not a good idea. Just look at the stock market and, choose a time. This is when I'm going to buy. I really believe in this stock. This is when I'm going to buy. This is when I'm going to get in, and don't delay your purchase. The second biggest mistake for beginning investors is not to understand exactly what you're purchasing. You've heard something, you've heard mention of a name here and there, and you're like, okay, this is the hot stock out there. You may have read something. It may be on the news all the time. This is the stock to get in. We have a lot of AI stuff going on, and what is the main stock out here now? What is the biggest stock out here now? And then you don't understand what's going on. That's not a good strategy. I would say make sure you understand something about that company, especially what they produce. And a great way to get this knowledge as soon as possible, if you're interested in any particular stock or index fund, mutual fund, whatever it is, you can go to Yahoo Finance. Go on there, go up under, you put the ticker symbol in there, and then you go up under the company profile. Up under that profile, it'll tell you who are the main executives of that company. It'll tell you exactly what that company does, who that company is associated with. You can go over to the financial part of it, and it'll give you balance sheets. It'll give you expenses. It'll give you if they pay a dividend. It'll give you all of this information about the particular stock that you're interested in. I would do that before I would invest in any of my stocks. Now, did I do that before I did? No, but I did follow people who did understand all the stock, and I listened to what they said about them. And then I went on Yahoo and verified what they said about these particular stock. So, and I made good decisions in that. But, and there are various people on YouTube that talk about the stock market. And, you don't want to lend your ear to everybody because everybody does not know exactly what they're saying. And I would not trust everyone, but I would do some research. You can go to the Wall Street Journal and do some research. There are various sites out there. Like I said, Yahoo Finance is one of them that you can go to and learn about the different stocks. And you can Google some of the stocks. You can go on ChatGPT and ask about some of the stocks, but learn what they do and how are they connected outside, environment. If you're going to be in the medical, if you're looking at medicals, if you're looking at financials, look at their statements. What are they producing in the future? What's the news out on them? Look at all of this. So when you say, I truly believe in this company, you will know that this is something that you've studied and that you're willing to put your money into to make it grow. Another big mistake new investors make is that they don't diversify their investments. They hear about some hot stock and they want to go pour all their money into this one particular stock, not knowing if it's going to go really keep going up. It may dip, and when it dips, things happen. And if you're a new investor, you're like, oh no, I don't want to lose all my money. You may try to sell, that type of thing. So I would say if you're not exactly sure, you may want to research index funds or mutual funds because there are more stock in those actual funds than just one. So you're more apt to not lose, or it's more apt not to drop down as fast as a single stock. So if you invest in a single stock, if something happens, some news comes out about it, it may drop like a rock, right? It may drop 15, 20% in a day. And you're thinking, oh no, I'm losing all my money. But if it's in an index fund, it'll be one of many stocks in there, and it won't drop down like that because more likely all the other stocks are not going to drop down that fast just because some news came out on a particular company. So I would say diversify. Then once you get a basis of index, like I have I have 3 index funds that I have 4 index funds that I'm invested in for various reasons. But that's the basics, right? That is my basis. Then I can start looking at individual stock after that. But I have my basis down and it's more steadily going either up or maybe slightly down. But over the years, it's steadily going up. Some of these pay dividends. That's another thing you want to look at. But I'm diversified. I'm not in any just 1, 2, 3 stocks and nothing else. I'm in index funds, number 1, and I have a mutual fund too. But then number 2, I have some other investments that I'm interested in. But I have a basis. So make sure that you diversify, research that, and do your research on it and diversify before you just jump right in on any one particular stock. Okay, now this one is one that may slip up on you, but when you go on the platforms, whatever you decide to invest in, especially if it's a mutual fund, make sure the fees are at a rate that you want to pay. You don't want all these fees for this, fees for that to eat up your profit. And when you start talking about some of these funds, some of them have fees based on the fund. So go in, research the fees, and look at them. How much you're going to be paying annually to have this fund? How much it may be making you, may not be making. It may be a little calm and kind of sideways one year, but you're still paying out those fees because you're obligated to pay out the fees. So pay close attention. You don't want the fees to eat you up. And specifically on mutual funds, they have quite a few fees, and some of them are very high. So, but you can look at the different mutual funds, see what the expenses are for them, and choose the one that you want to, if you want to invest in mutual funds. If not, invest in index funds. The fees are much lower if there's fees on them at all. They're much lower than the mutual funds. So take a look at those in whatever particular fund it is and see how much you're going to be paying in fees before you make that investment. All right, if you've made it this far, you've invested in me, one more investment, hit that like button and that subscribe button so that you can stay up to date on the latest information as I'm bringing it to you. This year, you guys are going to have a great year. I'm getting down to some things that you all want me to talk about, and I'm giving you the information that you need to grow your money. Okay, we're already on number 5, you guys. Can you believe it? We're moving through pretty quickly here. This is a huge mistake, and that is actually investing with money that you're going to need soon. If it's something that you need either on a weekly basis, a monthly basis, or something that you have set aside and you're like, well, let me just put it in the stock market for a few months, see what I can make, and I'll pull it out. Do not do that. The stock market should be a long-term play. As far as I'm concerned, for me, it's a long-term play. If I'm not willing to leave that money in there 5 to 7 years, I'm not going to put it in there. Now, if I buy something and it's not going in the right direction, or I feel like I've made a mistake, yes, I may get out at that point in time. But I'm not putting money in there thinking that, oh, I'm gonna need this money in 6 months to buy something or pay something off. So I'm just gonna drop it in the stock market and see what I can get and pull it out, because you may lose big time. There's always a risk. If you do the stock market, there's going to be a risk. Anything that you invest in, there's always a risk. You have to calculate the risk. I would tell you, do not put money in the stock market that you're going to need pretty soon. You know, it could be you're going to need it in the next year or 2. I do long-term investing, which is at least 5 years, 7 years, or 10 years. I have plans to eventually pull my money out, right? But it's not in 6 months, it's not in a year or 2, because you don't know what can happen to the stock market. It can take a downturn, right? And so the money that you put in will, go down. And if you put 10,000 in, and next thing you know, in 2 years, it may go down and stay down for a while, and it may be 9,000. And then it's time to take it out. You've lost $1,000 and you've lost time over this period of time in doing it. So be careful with that. But that is a critical mistake that new investors invest things that you're not going to need, that you're not going to use in the next few years. I personally invest money that if I lose it, it's not going to hurt me one bit. I'm not going to put something in there that I know that I'm going to have. Those things I put in my high yielding savings account because they're protected. And I know that when I need it, it'll be there. I can pull it out and, pay for whatever I need to pay for. So just keep that in mind and don't make that mistake as a new investor. Okay, for this next one, this is one that new investors make quite often, and it's built on emotions. Basically, if you get into a stock or a mutual fund or an index fund and it takes a dip, because most cases, eventually it's going to take a dip, right? They see the dip and they're like, oh, I'm going to lose all my money. Let me panic sell. Sell it, and then next thing you know, you take it out and then it moves upward. And you've just missed out on a large investment that you could have made money on that. So if there, like I said, it's a risk, but do not panic sell. If you truly believe in that company, see what is the reason why it dipped. It could be something that was said out of the White House that made it dip. It may not be, they could have a quarter that they didn't meet the goals or something like that. What they predicted that their earnings. Could be something like that. But if you truly believe in the company, see where it's going. Don't just sell in the because panic sell. If it goes down a day, a lot of people sold at the wrong time and they lost big time the money that they had in the stock market. Had they waited a day, a week, a month, it would have gone back up and they would have been just fine. But just know it's normal for the stock market to go down, to go up, to go down. Today it could be an up day. Today it could be a down day. You just don't know. And over the hours, it may start out as going up, and then by the end of the day, you may have gone down. It may start out as going down, and by the end of the day, it's recovered and it's gone back up. So when it comes to the stock market, if you truly believe in the stock and you've done your research, let it ride. Watch it if you need to, but let it ride. I watch mine. I look at it every morning when I get up and throughout the day. I have it on my phone so I can watch what's going on with it. But I don't panic sell. If it's something that I want to sell, I may put it up for sale, but I'm not panic selling because, oh no, it's dropped. Let me get out of this. Let's not do the panic sell. But that is something that new investors do because they don't know that the market is doing that. Just like, let's say you get on an airplane. If you don't know you're going to hit air pockets, Like when you drive a car, you may hit a pothole. You know, the car is going to shake a little, right? In an airplane, it's normal. Don't think, oh no, we're going down just because you hit an air pocket in an airplane. So treat the stock market the same way. It's going to have its bumps, but it's going to be fine. Look at the history of it. It's always gone up in the past. It'll continue going up. Just make sure you have a good solid stock. And number 7, this one I get the question on all the time, but I would say before I would tell anyone to start investing in anything, I would make sure you have a plan. Is your finances, are they together? I mean, is everything in line? Do you have an emergency fund? Do you have a budget? Do you have everything you need to have on that side before you start investing? And do you have a plan when you invest, how much you're going to put in, and at what point in time you feel like, okay, I'm going to take it out? You know, if you're planning for retirement, and if you're 30 and you're going to retire at 50, 55, are you going to leave your stock in there for 25 years and then at the end of 25 years take it out? What are you going to do? But have a plan. Don't just go in there blindly and, you know, not knowing what you're going to do. Even if the plan is to dip a little bit in here, dip a little bit in here, you know, you may have a plan of putting a certain amount in every week or every month, or at the first, put a certain amount in at the 15th. Every time you get paid, you may be investing $50 in the stock market, or putting it into your brokerage account and then investing that eventually in the stock market. But have a plan. Don't just randomly go in and buy some stock and not know what's going on, but have a plan, an entry plan, and have an exit plan of when eventually you want to get out or do something different, whether it's investing in the stock market or investing even in rental properties. Have a plan. Never go into anything without knowing your entry point and at what point in time in the future you're going to get out. Now, if you extend that and change your mind, that's fine, but at least have a plan going in, and it'll keep you out of a lot of trouble, keep you out of a lot of worry. But these are the 7 biggest mistakes that new investors make, and I don't want you to make that. If you decided that you're going to invest this year, great decision. Make sure your other money is in order, that you can invest freely without worrying about bills being paid, without worrying about emergencies coming up and you not having the money to pay it. But it's a great thing to do. This is the way we build wealth, you guys. Investing is the way to build wealth. So congratulations on your decision. I hope this has helped you some. And with that, I will see you in the next video.
Go Adrian. Humble, go get it blessed. Let's go.